Welcome to the Bullion Signal Podcast. We're the channel that cuts through the noise to look at the big picture, the macro forces shaping our world, and what they mean for real assets like gold and silver. Today, we're diving into a signal the market is flashing that you absolutely cannot afford to ignore. You know, in finance, some rules just feel permanent. They're like gravity. They've been true for so long, we don't even question them anymore. But what happens when one of those foundational rules just breaks? For well over a century, there has been an unspoken law in the commodity markets. A truth so fundamental, it was just accepted as the natural order of things. A barrel of crude oil has always been worth more than a single ounce of silver. And frankly, it made perfect sense. The entire 20th century was built on oil. And it's not hard to see why this rule held firm for so long, right? I mean, on one side, you have crude oil. It's the lifeblood of our entire global civilization. It powers our cars, our planes, our factories. It's in everything. On the other side, you've got silver. Sure, it's a vital industrial metal, a historic monetary asset, but it's always been seen as playing second fiddle to oil's raw, fundamental power. Well, you can take that century-old rulebook and throw it out the window, because that era is officially over. That financial law of gravity hasn't just been bent, it has been completely shattered. In December of 2025, something that most experts would have told you was impossible actually happened. In what can only be described as a historic tectonic shift, the price of silver just exploded upwards. It didn't just climb, it launched, blasting past every previous record and hitting a jaw-dropping new all-time high of nearly $59 an ounce. A move like that sends shockwaves through the market, leaving traders and analysts just completely stunned. And this is the moment it all changed. The crossover. At the very same time that silver was hitting that incredible peak, a barrel of West Texas Intermediate crude oil was trading for about $58. So for the first time in modern history, a single 1-ounce silver coin in your hand could buy you more than an entire barrel of crude oil. Think about that. But here's what you really need to understand. This isn't just some strange little quirk in the market charts. This is not a simple story of supply and demand for two commodities. No, this is a massive warning flare being shot up from the engine room of the global economy. It's pointing to a deep, hidden, systemic stress that's reaching a breaking point. Now, your first instinct might be to look for the simple explanation. You might think, oh, it must be all the new demand for silver and solar panels and electric vehicles. Or maybe a big mine must have shut down somewhere, cutting off supply. And while those things play a role, they don't even come close to explaining a shift of this magnitude. The real cause is much, much bigger. The true drivers of this historic event are two forces that have been building like a pressure cooker under the surface of our economy for decades. The first is debt saturation. The second, which always follows the first, is currency debasement. Let's talk about that debt. For years, decades even, governments and corporations all over the world have been on an unprecedented borrowing spree. We've piled up mountains of debt at a pace that's just unimaginable. We have finally reached a point that economists call debt saturation. It's a tipping point, a structural crisis where the system is so choked with debt that it simply can't function properly anymore. It's an unsustainable peak. So what happens when you're trapped under a mountain of debt that's mathematically impossible to ever pay back in real terms? Well, the system has an escape hatch. It's called currency debasement. It's a deliberate strategy where you create trillions of new dollars, euros, yen out of thin air. The whole point is to make the currency worth less, to devalue it, so that all those massive debts from the past get smaller in real terms and become easier to, manage. And that brings us full circle, right back to silver and oil. Because when you're in an environment where the money itself is being intentionally weakened, the market starts to think very, very differently about what value actually means. The old rules get thrown out, and new ones are written in real time. Here is the critical difference you have to grasp. Oil's price has become financialized. Its value isn't just set by physical supply and demand anymore. It's determined in the massive paper futures markets through complex contracts and derivatives. Its price is deeply tied to the financial system. Silver, on the other hand, is being sought for the exact opposite reason. Its value is being redefined by its tangible, physical scarcity, something real and finite that exists completely outside of that fragile financial system. This quote really says it all perfectly. You have to imagine the global economy as a massive ocean, and a storm of debt and currency debasement is brewing. What the market is doing right now is looking for a lifeboat. Capital is fleeing the big, complex, paper-based system and desperately seeking the safety of real, tangible, physical assets. So what's oil's fatal flaw in this kind of environment? Well, its physical scarcity is real, no doubt, but its price, its value, is being measured with a tool, the dollar, that is being engineered to shrink. It's like trying to measure the height of a building with a measuring tape that gets shorter and shorter every second. The number might stay the same, but the actual value is plummeting. So you can see why the market is making this choice. Right now, a bet on oil has become a very complex bet. You're not just betting on demand, you're betting on geopolitics, and most importantly, you're betting on the health and stability of the entire financial system itself. A bet on silver, however, is becoming a much simpler proposition. It's a direct bet on a tangible, finite asset that has served as a reliable store of value for over 5,000 years. And this isn't just some abstract idea for Wall Street traders. This historic signal from the market presents a very real crossroads for every single one of us. It forces a choice on how we want to position ourselves for what's coming next. You really have two paths ahead of you. Path one is to ignore these signals. On that path, you risk becoming an inflation victim, feeling powerless as you watch the purchasing power of your savings just evaporate. You feel trapped by rising costs. But there's another path. By understanding what this signal means, you can choose to become a wealth preservationist. You can take steps to protect what you've worked so hard to earn, shielding it from currency debasement and feeling empowered to face the future. So let's bring this all together. We need to be crystal clear about the message the market is sending. This isn't just a minor fluctuation. This is a final warning. It's a giant flare being shot into the sky, and we all need to see it for what it is. If you remember nothing else, remember these three things. First, this crossover is a massive warning sign about the fundamental stability of our global debt and currency system. Second, in a world where governments can create money from thin air, true, verifiable physical scarcity is reemerging as the ultimate safe haven. And third, right now, silver is acting as the canary in the economic coal mine. It's the first major asset to scream that something is deeply wrong. When you boil it all down, the great commodity crossover is sending one simple, powerful, and unambiguous message for all of us. And that message is this: in the economic environment we are now entering, tangible, physical assets will beat paper, financialized assets. And that really leaves all of us with one final crucial question to think about. In a system where money can be and is being created in infinite quantities out of nothing, what is actually scarce? What is truly fundamentally valuable? That's what we all need to figure out. Thank you for tuning in to the Bullion Signal Podcast. If you found this analysis valuable, please make sure you subscribe to our channel, give us a like, and share it with someone who needs to hear this message. We'll be back soon with another deep dive into the signals the market is sending us. Just as a final note, please remember that the content in this podcast is for informational and educational purposes only. It is not and should not be considered personal financial or investment advice. You should always do your own thorough research and take full responsibility for your own financial decisions.